Hello, Warriors. How's everyone doing? Get my charts up here. Dollar bouncing. Hi, Kevin. Didier, hello. Alexandra, Leonardo. Kevin, how's it going, my trading warrior brother? Yiğit Harrison from Turkey. Welcome to Face. Hi, Scott. Hugo. Okay, so um, yesterday, Blake and I were talking about the yen turning. Here's the daily. So it was
Oh, I
down
got
here.
some words for that, and we'll come back to that after you're done. I'm
Okay.
so irritated, Dale.
All right.
I'll let you go. Sorry,
That's
I
all
had
right.
to throw that in. I'm so. We'll talk about it when
All
I
right.
come back.
So it's not late. It hasn't even broken out yet. So, that's 104, but we are getting a nice little reversal week. And just to show you guys how off numbers sometimes can offer rejection, we need to close over 103.66 and a half for a 2 week reversal. And coincidentally, look at the high here. 74, but we're under the off number. So, there could be a scenario if the number is weak enough tomorrow where, I don't give it a high probability where we could still make one more new low in the dollar without making a new low in US dollar yen. But you could tell the difference just in the weekly candles, how much stronger yen is. Look at this weekly candle and the dollar. See, it's still red, but it's a hammer. And, we've had, at least 3 attempts to turn it. You just really have to be careful if you're still short. I mean, market's kind of telling you it's running out of juice to head down. And, maybe, like I was saying, I'm looking for 92, 91.80 something. It's a 2 month reversal. This surprised me, and in fact, uh, someone in here, one of our trading warrior brothers, said, Dale, yesterday when I was showing S&Ps, that you had there was a confirmed high right here. So someone knew my stuff and pointed it out to me. And Nasdaq didn't come close to making a new high, but tell me stop hunts don't happen. We ended up taking out Monday's high or Sunday night's high by one handle. Okay. Just by one handle. So if you're short with stops over here, you're gone. You may want to be. Maybe we get one more push up. Still think it's a topping mode. Um, NASDAQ's trying to recover, but still pretty far away from the high of the move over 12,950. So, it's almost like you're looking at two different markets when you're looking at NASDAQ and you're looking at S&Ps right now. Euro finally trying to roll over. Could we generate one more shot, one more new high? Sure, we could. You look at the weekly on Euro, it's still an up week, right? Although, we'll see what happens tomorrow with the NFP. And it is pretty far away from its off number, which is 2187. So, we're still 100 pips away from it being able to reverse this week. So this tells me maybe we can eke out one more high. And I'd love to see a new high in the commodity currencies now. Um, you know, uh, Maybe we get one more drive up here in Kiwi, and I think Aussie is going to be the preferred short. But we finally got some divergence on the 2 hour, something I was talking about with Amanda when we were here that we were confirming. So even though on the daily it looked like a three drive, that we needed more distribution or momentum not to confirm new highs, which is starting to happen. It happened even on the 15-minute chart, but if there's one more rally left in this, either tomorrow or next week, I would attack Aussie. Um, I have a little different view, that I think that we're going to get a top and there might even be a break back under the 70 handle. I'd look for some kind of fib retrace that could take us back to maybe, here. And would a break back down under 70 disturb the bull market? No, probably be the best buying opportunity. And that would be with the dollar index probably recovering back towards the 95 level. Okay, back to here. Look how these moving averages are intersecting up here at 95.5, which has always been my contention, even when I was early looking for lows. And all it turned out to be was short-term lows. I do think that there's potential for a rally back to 95 when we turn. 92 is going to be kind of the line in the sand. 91.80, what's this low right here? 91.74. So 91.80 is a monthly reversal, and here's 91.74. So a lot of confluence right here to, get back above this low, of course, would be pretty constructive. Uh, I don't watch it on YouTube. Um, I would take a shot in the S&Ps again. Done nothing wrong on a weekly basis yet. It's amazing from where we were. Um, I was thinking, this key reversal took out the high by one handle, but look at the divergence is pretty glaring. So, this may still be an opportunity for some type of short up here, even though we've recovered. And NASDAQ, it's a different picture. So if the dollar's good, almost everything else isn't. So that's something to keep in mind. If we're going to get a rally eventually to 95, it's going to pressure everything. And again, when you look at the yen here, we haven't even broken out 104 as the level of, horizontal resistance plus the wedge line plus a 50-day moving average around there. And if you're a believer in what wedges mean, they can retrace 100% of the move, and 100% of the move where I have this anchored is up here, about 110, 111. And then you have this huge formation that you have to look at on a monthly. And after this, we'll hear Blake's war story here on yen. So here's a monthly. So, pretty important level that it's holding. If we could get a turn here, it's a huge triangle, about a 8-year triangle. And, we get up to 111 and break out, maybe we're going here. I mean, look at the monthly, RSI up here diverged a little bit at this high, but, this might be possible. I know it's very long term. Take it 104 is the first step. Yeah, the insurgency. Yeah. Um, I really wasn't surprised that happened. I'm surprised that everyone else is. Go ahead, Blake.
I'm so sorry. I did not mean to do that.
That's okay.
I
I was
actually meant
done. Perfect
to.
timing.
No, you can take back the screen if you want. Go
No,
ahead.
I'm done. Someone was talking about that insurgency, but what's
Well, you
happening.
know what I guess what I should say, Dale, is that you called it, right?
Yeah,
I mean, you did.
yeah.
You called it. Sorry, I've got to figure out what screen I'm on. Something happened
Okay.
yesterday where I screwed up my can you guys see my Forex analytics right now?
Yep, we got it.
Okay. I mean, you called this, really. You said that there would be, civil unrest and,
Yeah.
storming the Capitol. I don't know if you used the exact words, but I mean, it's pretty unreal. And I'm gonna just I obviously have to acknowledge what had happened. And I think we all have to. Um, and I mean it's sad. I never thought in my life I would see something like this. And I have to say, Dale, and I felt the same way during the Black Lives Matter protests, and I felt the exact same way as yesterday.
Yeah.
I'm a former infantry Marine, and I served my country honorably. I'm a combat veteran. I've had bullets zinging by my head, and I that yesterday that was the most unpatriotic I've ever felt in my whole life, actually. And that sucks. I mean, it sucks. And
Yeah.
so I'm not going to play into the politics conversation other than it really made me feel like crap being an American. And
Yeah.
that is sad.
Think about what our adversaries think.
Yeah. And guys, you have to understand, I served the military. I'm the ultimate patriot. I've been to combat for this country. I've sat there in a war time situation thinking I'm doing this for my country. So if that's not patriotism, I don't know what is. So when I feel that way, like I felt yesterday, that is sad. Sad.
It's
Okay.
like
And
Kent State was sad, you know. It's like the 60s
yeah,
on steroids.
it is. It's, and again, I'm not gonna play into, this is my side, that's your side.
Yeah.
This is America. This shouldn't happen in America. I don't care what side of the aisle you're on.
Yeah.
It's embarrassing. It's sad. I'm embarrassed, and like I said, I'm least patriotic I've ever felt in my life, and that's saying something for somebody who's done what I've done. So anyway, and I really and I feel bad for the loss of life. The lady who'd been shot and died. Again, it doesn't matter what side of the aisle she's on. She lived as a patriot, as a former military person out of San Diego, and she died. You could say she died a whatever you want to call it, but it's unfortunate, and so that shouldn't happen. Those images shouldn't happen, and I have no other words. Anyway, so let's get to the markets and let's talk about why. I know a lot of people look at the markets, Dale, and they see, oh my God, stocks are going higher. I mean, why are stocks going higher? You probably heard or saw my tweet. Maybe you did. I'm sure some of you guys did when I tweeted. I'm like, meantime, here we are at all-time highs. As we made a generational low yesterday. Before moving higher. I mean, look, the stock market is going to look past all of this. We're going to get past it. Donald Trump's got 2 weeks, if not less, left in office. He's going to be, a distant memory to the markets in about a month's time. Once stimulus comes through, infrastructure spending, probably higher taxes. So the market's really focused on other things. Market doesn't really care about what's happening in America or what happened at the Capitol, as long as business continues, right? And people continue to spend. Again, we had all this ruckus on Capitol Hill, however you felt about it. Regardless, we will move on and life will move on. So the market will too. Now, do I think that we might see some negative fallout in the markets at some point? Yeah, especially if the markets start to grapple with the idea that, higher taxes are coming and, the virus is still, wreaking havoc throughout the world, not only the United States. And eventually the markets may come under pressure. But right now, the markets are not focused on that right now. Okay. And so, what I'm focused on is really simple, is this channel that we're in. As frustrating as it is, since the beginning of November, guys, it's January 7th today.
Yeah.
We have this, and this may be a wedge. It may be a wedge. I have it as a channel right now. The only reason why is I'm just connecting the lows, from that spike low right there.
Yeah.
But what that really tells me, personally, is that while we're above at this point in time, while we're above this spike low, which is 36.63. So I'm just going to write down, oops, where are we? 36.60. It's bullish,
Yeah.
period. You know, we're in breakout territory. The market's bullish. You know, you can argue it all you want and say, well, it shouldn't be up here. Yeah, well, it is. And the market's wrong. No, it's not. It's right. Market's right. You may think it's mispriced. I think it's mispriced, but it is right ultimately, you know. So the next resistance, if we break out, will be right here. 38.15, 127% extension channel top. So let's write that area down. 38.15, right? 16, but you know, you get my drift. That's the top of the channel. Okay, let's talk about, you know, I mentioned in my tweet, for those of you that are just joining in, and by the way, we do this broadcast every day. It's free. So thanks for joining in if you guys are new. I'm talking about, I want to talk about the dollar, but also I want to talk about, you know, the euro. Well, let's talk about the euro, where it's at. So the euro stopped exactly where support is. Now, if you guys are a Forex Analytics subscriber, you just got this update an hour ago, I think. 2 hours ago, sorry. As soon as I got up, I had to say it. The euro dollar is testing uptrend line at 22.50. A break of this support would bring in a 25 move, but we should see a bounce towards 2300 intraday. Okay. It's bouncing now. And as long as that trend line remains in, that was the update that I pushed. Yeah, we should bounce back towards 2300. Matter of fact, I think we'll bounce right back towards this 2310. That was the previous breakout point, but we'll mark up as resistance 123.50. Okay. So support 122.50. You guys should have known this from yesterday. I mean, that trend line is key. And as long as we're above that trend line, there's no reason to be bearish the euro right now. Right, Dale?
Yeah. It looks like it's 100 drives to a top.
Yeah, 100 drives to a top. Very good. Resistance is going to be 123.15 now, or 123.50. So it is bullish. Now let's talk about the yen, because I said I was going to say something about the yen. So Dale, great call yesterday.
Thanks, Flip.
You know, with yields breaking out, I bought the yen and I got trumped, hopefully for the last time in my career, because Trump has gotten me many times. I think the last example was when we were in our stimulus negotiations in November. And I think I told you guys this, Trump walked away from the negotiating table. I shorted risk. I was short, like, I forget what I was trading. I was maybe short the Aussie, and you know, it was like 8, 9 o'clock at night my time, so probably like 11, 12 o'clock Eastern. And Trump decides he wants to go back to the negotiating table. Well, at that point, I was walking around a soccer field, and I literally lost all of my month's profit and then some. So, and that was like the last time I've been trumped. And so yesterday was like this is another example. You know, I was long the dollar yen, Dale.
Yeah.
It was great. I mean, you know, long the dollar yen. We hit the 618. This is the hourly. I knew we hit the 618. Matter of fact, I sent an update on, or we talked about it during the daily roundup. I'm like, watch the 618, 103.40. It stalled up there. I sold a little bit. You know, I sold a little bit of what I had, but overall, I'm like, okay, I'm going to play into this wedge. Then the Capitol Hill thing happened. So dollar yen starts to slip. I own it at 20. Because I bought it at 20, sold some at like 38 or whatever. It was a sizable position too. It started to slip, and we're down at, you know, 103.15. I'm near break even, and I'm like, man, it's holding up pretty well. and you know, things are still kind of getting out of control. And I'm like, God, it's still holding up well. Yields are holding up well. I'm going to continue to hold it. And then, you know, as we're getting close to the close, I'm like, I can't stand this thing, because what happens if things escalate? Now I felt that this is going to be quelched. And if you didn't know my opinion, I'm like, okay, this is kind of a staged event. You know, they just kind of let them walk in to a certain extent. Um, they were peacefully being ushered out of the Capitol, which, you know, I'm like, okay, this is theater. And so it'll be over tonight, and then, you know, it should resume. But, you know, I was also thinking, well, how about if, you know, violence erupts in other places around the United States? So I just couldn't take the risk, not this early in the month. You know, if it was, you know, later in the month and I'm sitting on a ton of profits on a monthly basis, I would have, you know, probably stuck with it, but I didn't. So I got out, and I ended up ultimately netting out a loss. And I was so irritated, Dale, looking at it this morning.
Aggravating business.
Very,
Sometimes.
so you know, just so you guys know my story, you know, and you know, tell you what happened to me. That's exactly what happened to me. And I got out at like 103.08 or something like that, and my average was like 103.18. And like I said, I had a good sized position, sold a little bit, but I netted a loss. You know, when it dropped back below 103, I'm like, oh, look, I made the right decision. And then, you know, get up this morning, I'm like, oh no, I didn't. So
Yeah.
so 104 is going to continue to be really big resistance. Obviously, we're looking at this trend line. 104 is a horizontal resistance, or 103.90. I think we're going to have to be a little bit more granular than we have been the last few days since we're approaching it. So I'm going to say dollar yen, 103.90. And I'm also going to say that we should have support now back at, you know, 103.40, but I'll just say really 103.30 if we get a dip back down there. Now, the only thing that would worry me at this point is if, and I'm going to put it in range, because, well, you know what, Dale, I have to keep it in bearish while we're below that
Yeah.
trend line.
Yeah.
You know what
So
I'm
you
saying?
get the 104 breakout or whatever.
Yeah. Until you get that out of the way, you're right. We got to keep it bearish. But the dollar yen, I think that the risk is if yields start to really fall. Like, you know, we're above 1% now in the 10-year. So being above the 1% as we were breaking out, you know, as long as we're above that, I think the risk is the dollar yen goes higher. Now, if we come crashing back below that because we get risk aversion, whatever the, you know, whatever the story is, then you got to be a little bit careful with that trade. All right, let's continue on. Now, the question might be, well, why isn't the pound following with the euro? Remember, we just got Brexit done. Everybody knows that we're in lockdown in the UK. It's not like it's unknown. Everybody knows. Everybody knows that the virus is ravaging through there. And guess what? The cable's not selling off. Why? I think it's because it's coming out of this descending wedge. And there was a Brexit deal, in case you guys missed it. So because of that, I'm not so keen on selling the sterling. Look, if I got to buy dollars, it's not going to be against the pound. I mean, you guys, again, you guys might think that, oh man, you guys might think that you know, it's a good idea to buy dollars, and it might be, but I don't know if I'd be buying, you know, dollars against the sterling. I'd buy dollars against other things, right? There, you know, if you want to play, you know, the dollar, I think the dollar is better played against maybe the Aussie or the Kiwi or the Canadian or something like that. Speaking of which, the dollar is getting a little bit of volatility, but as long as the pound remains above 135, you know, you can see how we, you know, 137 is resistance. This is still, I'm going to say, support. This is resistance. I can't be outright bullish to cable till we're above 137, but I don't want to be bearish while we're above 135 either. Okay. Now the Aussie dollar is still bullish, but if you guys follow me on Twitter, Dale, did you see my tweet yesterday late afternoon?
No, I missed it. I saw the chart of the day, but no, I missed it. So
DSI in the Aussie and the Kiwi were at
oh yeah, 90.
yeah. So everybody in the chat room who's in the Forex Analytics chat room, and by the way, here I'm going to give a hat tip out to all of our Forex Analytics subscribers. This is our chat room. This is where we're all at, and that's part of being part of the Forex Analytics family, right? So you can see all the chatting and that we do, all the charts and whatever else, and that goes on all day, all night. But usually and that's just through European trade today. It's usually in Asia where things are a little bit quieter. But everybody in the chat room, because I'm in there most of the day, everybody knows how I'm playing the Aussie right now. And I want to say that the Aussie DSI was at 90 yesterday. So is the Kiwi. So whenever you get those extreme sentiment indicators, and 90 is an extreme bullish or extreme bull indicator, meaning that all the traders are extremely bullish. And when you get that sentiment so extreme, usually it's time for a pullback once you're in the 90s or roughly, and we could stay there for a couple of days, but based on, okay, stock stopped hitting highs, a little bit of, we got some risk associated with what's happening. I felt that the Aussie and the Kiwi are going to come off. Okay.
Yeah. Gold came off.
Gold came off, silver came off, yields are rising, markets are going to start getting concerned about this, yada, yada, yada. Anyway, the Aussie is pulled back. Now we've hit the 50% support after hitting a double top. By the way, there's Momo Trader in our chat room last night. I saw it just before I went to bed. He said, hey, that we got a double top here. It's probably going to break in European trade. If you're listening in, Momo. Oh, by the way, I'm sorry, Chi. Chi's listening in right now. Chi was waving. Hey, if you guys are in the chat room and you're on Jumbotron, so say hello if you're around. Oh, there's Delios. Okay. Chi was waving to you guys. If you guys are listening in, pipe in. Anyway, so he was saying that there's a double top and it's probably going to break down in oh, hey, Stephmo. It was probably going to break down in European trade. And that's exactly how it played out. Oh, there's Hugo and Jane. Hey, Hugo, Jane Didier. Hey, I'm gonna thank you guys for all.
Blake.
Huh?
Yeah.
Huh?
Didier.
What? Didier. Didier. See, he says say DJ. So there you go. Jane says Ethereum new highs. Wow. All right. So anyway, a Momo Trader was saying there was a double top, and we're probably going to break, through here in European trade. Perfectly correct and succinct. Now we've stopped at the 50% retracement. So that means that this is key support for today. If we break through that, then we have one of Dale's famous throwovers of a channel, which means that's a longer term bearish development. So today we should be watching this support because it's also previous resistance. So that is at 77.30. We're really close. We're bullish right now, but a break below that support puts us, at risk of flipping the range. Resistance today is obviously going to be, well, I think any move back up to 78 cents now is going to find sellers, to be honest. I don't know if we're going to make it up to the highs. I just don't. Okay, continuing on. Kiwi, same thing with the Kiwi. overbought. Extreme daily sentiment index. Now key support comes in at 72.15. It's bullish while we're above, but we break below that, things are going to change. Resistance 73 cents. All right. I know the highs are just above that, but same thing with the Aussie. I think we'd be pretty lucky to get up there. Okay. Weekly jobless claims just came out.
Yep.
Let's see if it's moving the market. What did it come out at, Stel?
Very close to expectations. 10,
okay.
15K away. So who cares?
Okay, and guys, by the way, if you have Forex Analytics, you also get Data Flash. Data Flash releases the information about as fast as my Bloomberg. And here's my Bloomberg data economic calendar. Pay $2,800 for this one. For Data Flash, you get it with your subscription to Forex Analytics, which is
Pretty cool.
$100 a month, approximately.
Yeah.
So
10 pips.
Okay. Just a couple pips. All right, let's continue on. Dollar Canadian. So we have a descending wedge. We hit the 78% retracement almost on a monthly basis yesterday. I did have some dollar Canadian yen long, dollar Canadian longs yesterday. I let them go for a small profit. It's when stuff is happening like what had happened yesterday, Dale. Oh,
Yeah.
sorry. Let me see. Here's everybody was saying hello. I need to when things are happening, that social unrest that's happening, it's really hard to be long dollars. And I know the dollar is the is the risk off type of currency, but in recent weeks the dollar has been so weak, it's like, man, that's a tough trade, staying long dollars when that's happening. And so when the dollar Canadian was bouncing a little bit, but all that was happening, I'm like, I think I'm going to just take my profits here, and I'll just be more sure when we break through some sort of resistance, which right now is at 127.50, but we do have a descending wedge. And I'm going to keep that in range, and I'm going to write down support as being 126.20. Dollar Swiss. And by the way, that is key support. That's why I put an asterisk there. Dollar Swiss got a bounce, pretty good one. And support being 87.50, resistance is 88.60. It's bearish trend for now. Citigroup went short more US dollar Norwegian krona last night, like right here, right at the lows. Now, I don't think it's necessarily a bad trade over time, but with all this divergence and, the dollar is looking a little vulnerable for a snapback, I would be very careful with that. And we're at Steve's long-term target of saying 841. He's been saying that for weeks, and we've reached it.
So,
And so
sorry to interrupt, basically Citi were waiting for 15% move before they go short. Is that it?
Well, to be fair about Citi, they've been short the US dollar Norwegian krona for a long time. They're actually they're adding to their position,
Gotcha.
but it's like, wow, I know you're profitable, but after such a big move, you're going to be adding here. Like if I was short the US dollar Norwegian krona for the last couple of months, let's just say I'm not, but let's just say I would be adding here, there, not here. I mean, but that's me, that's,
Timing is bad, but time horizon is important.
Yeah, I mean,
In my opinion, Blake, we're gonna see USD knock below 6.
yeah,
I don't
maybe.
know. I don't know how many months it's gonna take. Maybe a year or whatever. But I believe we're gonna see sub 6.
And that's the one thing that they're doing is they're looking at a longer term, 2021 trade, which great. What I'd still look to try to choose a better entry for,
No,
again,
I'm with you there. I mean, timing is weird, and
Yeah.
in the short term, it is weird.
Right. But great call, Steve, nonetheless. 860 is resistance. We are in a bearish trend. And I would say 840 is support. And that's near yesterday's lows, which is near this channel support. We could make it a little bit further, but I'm going to say, I would say if we got back, well, actually, I should probably say 837. If we got back anywhere close to there, you're probably going to find some buyers down there now. Because I think a lot of the market may have found itself mistiming this. So if you guys are in the chat room, you guys know I'm long dollar Mexican peso. Okay. So I think we got a false breakdown. We've been accumulating a little false break. So now any dip back towards 1970 will be support. Anybody that shorted that false breakdown is very, very concerned about being short now. Resistance is going to be 2010. We break above that, then we're going to really start to squeeze. It's still in a range. Dollar index, let me just finish up here. Dollar index, again, we were very oversold. Resistance is at 90. If we get above 90, we've taken out the downtrend line in the dollar index. The euro hasn't taken out the uptrend line, but the dollar index has. So if we break above 90, we're really going to start to squeeze. Oops. Now, do I think that changes the trend of the dollar? Absolutely not. It doesn't. Do I think that we could squeeze all the way up to 91, 91.50? Do I think this is fair game? Yep, I do. I think all the way up to here is fair game for a squeeze. Okay. If we really start to go. Support. I mean, I think anywhere down to 89.50 is going to find buyers now. So gold. And we are above that trend line, by the way. I just want to reiterate. One of the things that would freak me out if I was short dollars is this. This is the last thing. Wait, hold on. Okay. Our bias chart, 1905. Why was 1905 important? That was yesterday's bias chart, by the way. That's from yesterday.
Yep.
This is today. So why was that important? Because we have multiple trend lines there. We have breakout point. Hold on. Everybody's mother's, brother's, uncle's, sister's, nephew's monkey is bullish gold. When we broke out here, I saw charts of people I've never seen before in my life getting retweeted. Gold's breaking out. I mean, everybody. I've got bank reports. Gold's going higher. Yada, yada, yada. Okay. So that was the breakout right there. This is a trend line right there. This is where we stopped yesterday, right at the intersection of the two. What does that mean today? If 1900 breaks, the dollar is going to squeeze, and you guys better get the hell out of the way if that does happen. Now, I don't think you should be bearish yet, but I think you need to start watching it pretty closely. Resistance at 1930 today. And I know it should be bullish, but I'm going to keep it in range because I think that should freak everybody out right now. Okay. All right. So there's your bias chart. Steve Stelios. Good morning, guys. How are you?
Good morning, sir.
Good morning.
All good. Kids going back to school on Monday. I'm very happy.
Yeah, I hear you guys are going to party. I bet you and your wife are going to get drunk.
Hey, we get drunk every day.
I know, like during the day.
I knew he was gonna say
Day
that.
drinkers. I bet
All right,
you
you're
guys
gonna
are
go.
party.
You're gonna get sober.
You guys will be like running around naked in your house with
I
glasses
got
of wine.
I got my wife half drunk the first date we had, and that's the last time I've seen her drunk.
Oh,
Yeah.
wow. Well,
Yeah.
you know,
Yeah.
that was like
Well.
what, 40 years ago? Congratulations.
That was 16 years ago.
All right. Well, hey guys, I want to say that for those of you that for listening into this webinar, all right, this is a free webinar for everybody, but please visit our sponsor. And if you go to Forex Analytics sponsored, go to Pepperstone. Pepperstone is one of the largest FX brokers in the world. You can see a little interview with me and Chris Weston, head of research there. You can go to this open account link, and if you open a live trading account with Pepperstone, if you're outside of the US or Canada, you can get Forex Analytics potentially for free. And this is the best time to be trying Forex Analytics because this webinar is sponsored by Forex Analytics as well. I had to throw that in there. But right now we have the best pricing that we do all year. And you guys know, if you've been listening long enough, once the pricing goes away in the next week, you won't get it again for a while. This is a great time.
Argel says Pepperstone is a great broker. I am very happy with them.
Yeah, and Leandro, who does our Spanish webinars, guys.
Yeah.
If you don't know about our Trufa webinars, Leandro Conde, he does our Spanish webinars, and he does them with Pepperstone sometimes. He has a big one coming up here in the next week and a half. And Leandro uses Pepperstone securities. He's been using them for years, and he loves them. So I can't use them being in the United States and doing what I do, but the reason why we partnered with them is because they assign people like account
relationship managers.
Managers. It takes care of them. It's pretty cool. Anyway, all right, guys. Hey, it's all yours. Have a great trading session. Good luck today. I'll see you guys on the daily roundup, which is a webinar for Forex Analytics subscribers. I'll see you guys in 4 hours for those of you.
Thank you, mate.
Thank you, Blake.
Yeah. Thank you, Blake. Hello,
All
guys.
right. Hey, Dale.
Hey, Dave.
Hey,
Phil.
Steves.
So today is the day when Biden is confirmed as the president, and obviously we had the events yesterday. I just couldn't believe my eyes. But anyway, things happen. And
To be honest, I wasn't very much surprised. I mean,
well, yeah, it's the US we're talking about. It's not, Greece. But anyway,
this was unprecedented. It hasn't happened before.
Oh, by the way, Greg is here, so I'm going to talk for maybe 1 or 2 minutes, and then he can come on. So basically, the events of yesterday's events are what's dominating now. And funnily enough, I was jogging this morning with a friend of mine who's a ship owner here in Greece. Very wealthy guys, quite clued up, and he was saying to me, what's happening to markets? They're going to tank. They're going to do this and that. I said, look, I'm looking at futures and they're actually up. And he's going, why the hell is this? And I said exactly what Blake said. I said, I think markets are just looking past that. They're looking at the blue sweep, Congress, everything, and how Democrats are just going to be able to spend. And, more stimulus, more money supply, more of everything. Eventually everything goes higher. Now, how does it get there? That's a big question. So he said to me, do we go long here? I said, going long here is very dangerous. But obviously you can't go short either. So I said to him, I'm sitting on my hands waiting for a pullback or something that will make me believe that this is it. We're never going lower again, which I don't think is happening anyway. So it's very difficult markets. And there are a lot of people who are confused, myself included. And it's not a bad thing to be confused. And when you don't understand something, at least I do, when I don't understand something, I just don't trade it. And I look at something else. So it's difficult times, and God help all of us. I don't have much else to say. We had some numbers. Eurozone CPI again at minus 0.3%, a million miles away from their target. And really, the Eurozone and every other major central bank are not doing anything in the near future, or even in the next couple of years. I think we have to have a big move first before anything can happen. So yeah, otherwise not that much happening. So I think maybe we can bring Gregor on, and he can tell us about his waves.
Yep, that's an excellent idea. Gregor?
Yeah. Hey guys.
Hey mate, how have you been?
Hello, man.
Hello, wizard.
Hey Dale. How are you?
Good, buddy.
Perfect. So
Back home,
yeah, but not back in school yet, like you guys.
and the kid's still there?
Yeah.
Okay. I know it's tough, bro.
Yeah. I will take them to Greece now from
So why don't you grab the screen and let's have a look of everything together.
I actually prepared some charts, so
Good.
Okay, so we will start with dollar index. I'm still not sure if we are going to see this current decline to unfold as a 5-wave movement for a wave C, or maybe even extension for a wave 3. But what is really important to me on the short-term basis is that we are overextended and that we could see some kind of a recovery. Now, looking at the 4-hour chart, okay, I think that we can be completing this at least 5-wave cycle on this time frame, and we could rally in 3 ways, maybe even higher than 91. Okay, so this is potential wedge formation, not only here on dollar index. You can see wedge formations also on the S&P 500.
Exactly, on risk assets, exactly.
You have the same thing. So I really believe that sooner or later, especially after this very sharp recovery and with everything what is going on in the US, I just think that stocks are too high. But the question is if you still want to buy the US dollar in these circumstances. However, I think that rally is healthy, and it's not only based on US dollar index, but also if we take a look at these correlations, do you see charts?
Yeah.
One. Which charts do you see now?
Dixie S&Ps.
Okay, perfect. So if we take a look at this one, we already talked about that one last year in December, and we mentioned that we are here in the 5th wave. So it means that the S&P 500 could be moving to resistance and dollar index potential support. So there's definitely expectations of a 3-wave pullback minimum. So I'm expecting this market this weakness, actually, dollar weakness, to slow down. Then you have, again, emerging markets here, also making 5 waves up with the 5 waves that I can count away from September levels. So watch out for this channel. If this channel is going to see the breakout to the downside, then I think that we could step into a higher degree corrective setback in 3 waves. So this obviously would also limit the upside, not only here, but on other global markets as well. Looking at commodity index, what is very interesting here is that we have 5 waves up exactly back to this gap when we have seen a sharp drop in February. Okay, so this gap on the S&P 500 has been filled already months back, but this one is filling it right now. So I think it's still a very important level, and also watch out this upper channel, Elliott wave channel, that could limit the upside for a current 5th wave. So even here suggests that maybe we are going to see a slowdown. Of course, it's very hard to predict where the 5th wave will complete.
Exactly. Exactly. That's the problem, Gregor. We've been talking about it every day. I mean, I think we're at the tough juncture in the market.
Yeah, of course.
That we need to respect the trend on one hand, you can't join the trend so late. It's
Exactly.
totally stupid. It makes no sense whatsoever. But on the other hand, you can't wake up every day and tell yourself, "Oh, I'm gonna try to fade this today." You know what I mean? We
Yeah.
just have to be a little bit patient and
Very
actually see some type of a reversal.
We're very patient, but we have a lot of markets that moving, as you said, into these extremes. I mean, from investment point of view, there's still opportunities. You can still write those some of the commodities, but you just have to realize and be prepared to scale into position whenever this pullback occurs.
Exactly.
Also, what we have here is the S&P 500 versus the 10-year US notes. This is the longer term chart, okay? And I think it's quite interesting. You have potentially 5 waves up here, and you are now in a big 5th wave. So what this actually suggests that S&P 500 is at the resistance, but the 10-year US notes, when I'll show you the next chart, they're not so bearish, as you know. Here we have the 10-year US notes. What we are seeing is just consolidating here at the highs and possibly retesting this support here back from 2012. So
I agree with you. I see a lot of people paying too much attention to the 10-year yield reaching 1%, and a lot of people trying to call once again, the reversal of yields. But looking at the chart, I don't really see any evidence just because we have a pullback that, the trend in yields has changed.
Yeah, exactly. So what I think we may see here a very nice push to the upside, and this could actually limit the gains for the S&P 500. At the same time, I would be looking for gold actually to break out here, maybe after this current pullback that I was very suspicious about after this sharp recovery at the start of the year, because these are normally very early flows that can be the fake one. So I'm not really surprised to see these pullbacks now on the short-term charts on the gold, and I think that this can be only a temporary pullback before we may resume even higher. So if we take a look on gold, just to give you an update here. Now, firstly, daily chart is still very clear. I mean, there was an ABC pullback. So there's a chance that this wave 4 is finished, as we already discussed last time, or maybe this whole wave 4 will become a little bit more complex. But for now, I will stay with discount looking higher, but after a 3-wave setback. Now, this was a very sharp reversal from the highs here. So clearly, I think that that's the first leg that belongs to a potential zigzag, meaning that you should be watching for potential support around 1880, around there, and let's see what happens. But from a longer term perspective, based on TLT, based on the S&P 500, I just think that metals should be very interesting, and silver as well. I mean, silver here also consolidating. You can clearly see that there is a very ugly price action, while the previous rise was a very clear one. So I think that this it's either all completed correction at the recent swing lows, or we are just in the middle of a complex correction. But the key is that drop from this August highs is, in my opinion, corrective, and that sooner or later we will see the next big move to the upside.
I think we're going to see silver above $50 within the next one
above
year.
50. Yeah. Silver can be a very good long-term play, but just traders have to realize, I mean, I would say investors, that if you approach this, you definitely should look for opportunities, and of course, without leverage.
Yes, obviously. I mean, looking at long-term trades, leveraging up is not a smart idea, obviously.
A lot of traders are impatient, so.
Yeah, I know. And those are the traders that don't stick around in the markets at all.
Now we can take a look here on the S&P 500. We said here's this wedge on the short-term chart.
And I want your opinion here, Grega. I've been talking about this ascending wedge that you're showing here for quite a few days.
Or for the last 30 days.
Yeah, my little problem with it, you know what it is that the inclination is not that steep that it would make me like very confident that this thing is breaking down.
Yeah,
I mean,
sure.
I'm seeing a potential. I'm not saying that's going to happen, but I'm seeing a potential even for a blow-off move out of this. So I'm a little bit torn. I mean, I don't know. What do you think about it?
Yeah, I mean, it's very hard for me to count this as an impulse away from November levels. What I'm also looking at here on a daily chart, okay, is the same extended trend line back from February highs, from a year back. Okay, so we are at this point now. We could see some throwovers. Generally speaking, I'm also observing this potential wedge if I connect also the lower side of these 2020 levels. Okay, so you can see both trend lines, and if we'll just stick around within these trend lines, then I think that there is even a bigger wedge potential here that could unfold and maybe bring us a top later this year.
Yeah. What about the potential of actually breaking higher and like going parabolic for a blow-off move?
Then I would be just looking for fifth wave to be a normal shape, a motive wave, or even an impulse here to bring us to much higher prices. Then I would be looking for to be now in a wave 3 of 3. But somehow I'm just skeptical about this, especially if I look at German DAX. Firstly, 4 hour, you can also see here potential wedge formation.
Yes. At all-time highs, by the way, as well.
Yep, exactly, at all-time high. So I have here also 2 wave counts. Now the first wave count suggests that we could be here in a fifth wave. Like I said, if we see some blow-off move on the S&P, then obviously we could see something similar here on DAX. Then I would be looking for wave 5 to be structured by 5 smaller waves towards 16,000. But I also have the second count in mind, where we could be dealing with a flat if the current rise from 2020 lows would only unfold in 3 waves and stop at the current levels. Let's say that we see some aggressive reversal in the next month or two, then I would start considering even something more aggressive.
Yeah, that would be very, very, very tricky for market participants.
Yes, but through history, if you look back, the S&P 500 DAX, there were a lot of flat formations.
True.
Yeah. So I think we should.
And it's the most devious price action because it's deceptive. It whipsaws people. It gets them long at the worst possible time. It gets them then short at the worst possible time.
Exactly, at the extreme levels when.
Yes.
Yeah.
Okay. What about?
We can look at dollar yen maybe for some short term.
Yeah, actually, dollar yen. Especially if we're talking about a potential of yields. You showed the bonds before that they're probably in a corrective consolidation, and I agree with that. That's my technical interpretation as well. So if that's the case, then we should expect another move higher for the bonds, which means another move lower for the yields, which means
the dollar
that USD yen should eventually just continue lower, at least for some time, right?
Yeah, but if we look here, we are in the middle of this range. And even if this is a triangle, it's a tricky one. It can be a bullish triangle, okay, or it can
or a B in an ABC, you mean, right?
But the point is here, well, currently, for the last few days, I see the 10-year US notes has room for more weakness there, right?
In the short term, yes.
Yeah. Yields are rising. So I believe that current sentiment could extend a little bit more regarding yields, and we could potentially see some sharp recovery here on dollar yen. Now, maybe it will be just a temporary rise here within this triangle range, and then we see a sell-off if these long-term correlations will hold. But here, I think that just from a trading perspective, at least short-term, it's very interesting to watch, very interesting to observe. Let's see what the non-farm payrolls report will bring tomorrow. And then maybe we have opportunities on pullbacks next week. Even
assuming that the market will care, because the market has almost stopped caring about data.
yeah, but still, I mean, why would you chase already now here if you can wait a little?
No, I agree with you. And I have the same formation and the same trend line support as you do on my charts. Now, last but not least, Bitcoin. Clearly,
Yeah,
in a motive wave of some kind. And I know it's extremely hard to predict when this thing might find a
Just
high
wanna
and
let-
pullback.
Just want to let you guys know it's 6,
Oh
top of
yeah.
the hour. Yeah.
So just a fast look at cryptos. Yeah, at Bitcoin. Gregor, what do you think?
we are definitely making an extended move to the upside. But still, I mean, looking for targets like 50,000, 100,000 are still quite aggressive upward levels. I would be aware of this wave 4, but whenever this retracement occurs, I believe it will be a very, very sharp one. Keep in mind that wave 2 was a quite complex here and a deep.
Mm-hmm.
So I think that this wave 4 will not be so easy to identify. It can be just a very sharp pullback before we may continue higher, or maybe something totally different, and maybe it can erase all of those.
And to be honest, cryptocurrencies have the tendency of really whipsawing people. I mean,
yeah,
even a few days ago, when we first go to 35,000, market lost within a few hours 20%. Before continuing higher. So,
well, I mean, very interesting is even this maybe log scale. Okay, well, here, if we see suddenly a very aggressive drop, then I would start considering even this one. If we see move back towards 16,000 suddenly, it definitely be on my primary list. So
okay, mate. Thank you very much.
Okay, thank you, guys. Thank you, Dave.
Thank you very much, Gregor.
Thank you.
Dale,
Thank you,
I'm assuming your guest is here,
Yeah,
right?
Peter's here. So, we're going to continue looking at wave patterns, and, just as there are many combination of wave counts, there are many different practitioners, and Greg is excellent, and so is Peter Goodburn. So Peter's with us, and Peter, I just upgraded you to a panelist, and I'm just waiting to say hello to you, my trading warrior brother. Happy New Year. Happy New Year, Peter.
Happy New Year, Dale. Can you hear me okay?
Yeah, I got you now, Peter.
Perfect.
I hope
Happy New
this
Year,
is
Peter.
Hi, Steve. How you doing?
Good. How have you been?
Yeah, brilliant. Thanks. Okay. Yeah, we're into the new year. My God, and it's been pretty hectic so far, hasn't it?
Yeah. It's eventful. So, may we live in interesting times. So, Peter, you remember how to share the screen here with that green box on Zoom?
Yeah.
And, we were just talking about Bitcoin, and I remember I remember a couple of entries that you gave, and the first one was in January, I think was it 2019, when we broke from 18,000 to 3. You saw that bottom, and then we had rallied down up to 10 or so, and you said there could be a pullback to 7, and there was. And you have tremendous upside targets. But let's start here with S&Ps.
Yeah, we can come back to Bitcoin a bit later if you like.
We could. Okay, so we had that big break on Monday, and yesterday in the S&Ps we took out that high by one handle. Kind of looked like a stop hunt to me.
Yeah.
And wondering what your count is saying here. Are we close to some type of correction in the S&P, and the dollar also very one-sided at this point with bearishness, and it looks like it's trying to come out of here.
Yeah, that's right. I mean, the S&P, I think that this S&P sort of pattern that we've looked at for a little while now is approaching its completion. I mean, there's this very distinct diagonal, which you see here. I mean, In Elliott terms, a diagonal is either at the sort of beginning of a trend or the end. This is an ending type diagonal. It comes as the fifth wave within the upswing from October. And what's very particular about an ending type diagonal is that the composition or the subdivision of the impulse waves, that's basically 1, 3, and 5. So here's wave 1, here's 3 and 5 up here. These are normally zigzags, or they're multiples, in other words, doubles or triples. And we've seen a sort of a zigzag up here. We've seen a nice zigzag here. Dimensionally, they look pretty good. If you can see 61.8 phi ratios in both, which is this little red symbol here. And to some extent, we get that in here. I was a bit surprised, I must admit, to see us take out Monday's high yesterday. I think that's morphed this single zigzag into a double, but I wouldn't expect it to last too long up here, really. And we should be getting to a point where we get a reversal within the next day or so, and another setup to the downside. So I don't think this has got a large amount of upside potential left in it. It looks very much to me as if it's tilting over. And overall, we see that, mirrored in things like the dollar, sort of making a formative low. Could trade a little bit lower, but it's not.
What kind of magnitude correction should a high develop here, Peter, in the next couple of days? Are you looking for 10%, 5%?
I think we can see a 20% drop.
Okay.
I'm just trying to change my page, but unfortunately the Zoom icons are covering up my page change.
Maybe you could lift those Zoom
I'm just
icons.
trying to see if I can get rid of it, if it's just a mouse over or not. No, I thought this was a mouse over. I thought it disappeared, but
Okay,
it's
so
not, it usually it's moused over, but
Steve, are you still here? Okay.
Yes.
Well, the other option is to do a new screen share, so you could stop sharing and then reshare something else. But yeah, there's always a new. Click the Zoom icons and slide out of the way is what Chris M is saying.
Let's have a look. Slide out.
Slide it out.
Okay.
Does that work?
I think probably will. I mean, it covers up the chart. Does it cover up my chart when you view it or not?
That toolbar moves, he says. Click the Zoom icons. Yeah. No,
okay,
I'm still seeing the S&P chart, the original chart right here.
Okay, I've taken this out now, so that's okay. Let me just, I think I've done it, so let's try it. So let's look at the larger picture. This is what it looks like from the March low down here. Can you see that?
Yeah, it's up there now.
Yeah, we've got 5 waves up into early September, and that's the same for the Dow as well. We dropped down in a very tiny 3-wave pattern. I mean, we've said this before, but this 3-wave decline, which bottoms out in late September, is really too small to be a second wave correction. If this is a big first wave up into the early September high, this is way too small. 8 times out of 10, you're going to fall back to wave 4 preceding. It's very, very rare that you'd fall short of that. Yeah. There can be situations which you do get shorter term movements, but judging basis what the sentiment numbers are like up here, and they're pretty big numbers in terms of bullish sentiment, I think we're okay on the right track to expect this whole area here to be an expanding flat pattern, this entire thing. And so we've got wave A down as part of the expanding flat, and then the second sequence of the pattern generally moves into a slightly more modest higher high. And we can normally measure that accordingly. If we, for example, just take some fib price ratios, and if we put the standard 3 sets of subliminal ratios in 14, 23, 38, we just simply extend wave A like this. And these are your set targets. So we're getting towards the 38% area here. And And that should be the precept to get wave C declines. Now, wave C should be 5 waves to complete the expanding flat. And again, we extend this by those ratios. In this case, we've extended by 61.8. And that pulls us back to about 29.80. Well, that's a good 20% drop, you see.
Yeah.
And that would get us
NASDAQ
then.
NASDAQ did not make a new high yesterday, Peter, with the S&Ps being able to equal one out. And I recall from interviewing you, if you're looking for 20% in the S&Ps, you're usually looking for a larger magnitude decline in NASDAQ. Is that correct?
Yeah, the beta is higher. So basically, the downside targets here for the same pattern. So it's an expanding flat pattern, A down. B in this case is a double zigzag, whereas the S&P is a single zigzag.
Mhm.
And again, we extend. This case, we've extended by 23%. That's all. And we've got these two numbers converging up here. And you can see it's hit that on New Year's Day and on the first day of trading of New Year. And we dropped back. And we haven't made a higher high. And I don't think we will. I don't think we will make a higher high. I think this could trade up through the session today, a little bit like this.
Yeah.
And I think if it's not tomorrow, Friday, it'll be Monday. And maybe sometimes we get a bit of exogenous news flow that maybe trigger a reversal signature, or
Yeah.
perhaps something, we just get illiquidity coming through, the markets start to profit take, or insider selling comes through, and there's no news at all. I mean, we won't know for sure. But what I am fairly certain about is that we've correctly designated this as a double zigzag. And I think that progress, I mean, if you look at basically that sell-off that we saw the day before yesterday down here,
Yeah.
it's basically touched the early September high. I mean, that
Yeah.
means that there's been no net gain in the NASDAQ, since
For a
September.
month. Oh, yeah, a couple
Well,
months. Okay.
Well, since early September.
Oh,
So
yeah, you're right.
for 3 months. I mean,
Yeah.
if you're a portfolio manager, you're not seeing much gains there, which I think is to some extent why we're getting rotation in the small caps. Like the Russell
Yeah.
has done very well, and
Also, Peter, before the high that we had in August, trying to short it, it was still pretty much a one-way market. And then in September, if your timing was good, even though the trend remained up, there were plenty of scalps that worked for you on the short side, which it was a different character of the market in the last 3 months and going into that September, where we really just were melting up with hardly any pullback. So I was actually able to come out with some nice bear trades over the last few months and still be wrong about long-term direction.
yeah,
Is that kind of a market tell that if you're against a trend,
and still
and
making
you're
money.
getting right, and instead of getting run over 10 minutes after you enter the trade?
No, I think that's a good point.
Yeah.
I mean, don't forget that if you're in a corrective format, you'll get these big sweeps of corrections, which retrace quite a big proportion of where you've come from. So,
Right.
for example, here you can
Yeah.
see down here, this was quite a big correction. Then we
Right.
gain, and you get another jerk, and this is very symptomatic of this type of function. So yeah, I think that defines a very, very two different levels here. Here you've got a roaring bull market, and here you've got a B wave of a correction. And I think that's why you did pretty well on your P&L, irrespective of whether or not you anticipated this or at the time or
that
not.
it was going to get to achieve those levels. So I'm assuming that if we're going to get 20% correction, I've been saying for a while that a natural battleground for the dollar to return to would be 95.50, 96 was where the dollar really began to accelerate to the downside. You want to move to the dollar, or
yeah, I mean,
the metals have been pretty tricky too. So go ahead.
Well, let's have a look at the dollar, as you mentioned it, because this is a new dollar cycle which I updated a couple of days ago, and we're putting this into our current reports. And And this
Okay.
this basically, I think it's been pretty good this cycle. It's got a few lumps and bumps in it, but I mean, we never use cycles for an exact day for a reversal. This is a composite. Basically, what the red cycle projection line is supposed to do is to show you approximate timing and direction, not amplitude, but direction. So amplitude, we're using Fibonacci price ratios to measure the wave counts and the wave sequences. But this is just basically then to show you direction. But what it's doing now is bottoming in January, around this time of the month. And it's basically moving up for the rest of the year. Well, pretty much so. I don't know whether it will continue to trade up like that, because I consider the resulting upswing for the dollar index to be simply a correction to the March decline, which is a 5-wave sequence. Well, let's have a look at that, and then we can check on the amplitudes. You mentioned 95 something, which I think is pretty much right. This is my idea, up to 95.30. So I think you and I are on the same page with that.
Okay. All right.
The main reason for the upswing is really the fact that we've got a completed 5-wave sequence down here. 1, 2, 3. This is a nice channel for 3. You can pretty much put a channel in there, and then we have 4 and 5 coming down. And yeah, I mentioned I'm not sure if we've bottomed just yet. I mean, it could still drift back a little bit, but if we have a more imminent top forming in the S&P and some of the others, I think this probably may put in a base. It was at 89.21 yesterday or the day before, and it could be, I mean, from a wave pattern perspective, whether you count the 5th wave starting from here or here, it's pretty much done. And you can fine tune a little bit if you go intra-hourly. But otherwise, this is generally bottoming out, and we should see a return back to wave 4 proceeding. In this case, it's about a 50% retracement of the entire move from March. Okay. So, yeah, I think that this is almost a done deal for me. And, I quite like the Canadian dollar as well. I was looking at that this morning with a client.
And you were real right about the decline of USD CAD. You've been bearish a dollar, so this is the first time that you've kind of looked for a decent type of correction in the dollar for a while. I mean, we had that thing in September that bounced, but so here, okay, nice picture. Okay.
Yeah, I mean, actually, it's not too dissimilar to the dollar index if you look at it like that. But it's got its own idiosyncrasies and different wave patterns, and that makes it really useful to make a direct comparison. So this is also a 5-wave pattern down, and I particularly like one of our discoveries many years ago was that a useful guide when you've had a first wave develop is to extend that by 1618 to derive the 5th terminal 5th, and that's pretty much where we've touched this week. We had a target that measures at 126.33, and it got to 126.
Don't give away all your tricks, man.
No, I want everybody to learn about this. I mean,
all right, I'm kidding you.
No, I mean, it's good. I mean, no, we're good with that. Don't worry.
Sell your secrets for $999.99. All right.
But yeah, so I think that's a good confirmation. It looks similar to the Aussie dollar, but in inverted. So I think the Aussie dollar, have I got it here? That's the S&P and the Aussie dollar. Here's the Aussie dollar. So it's pretty much close. Inverted.
Yeah.
Here's the March. I mean, this looks a bit like the Russell, actually.
Yeah.
The Russell. So you've got 5-wave patterns up. Some of the emerging markets have done very well. India looks like a big 5-wave pattern that's completing. I named that one in particular because it's really been outperforming.
Yeah, the ruble, you were right about the ruble. It came down. Did the real, you were also talking about that.
Yeah, all of these emerging market currencies, very, very important, really. Where's the ruble? I mean, we can have a quick look at that. Let's look at the bigger picture. Yeah, here we go. I mean, I think that we're going to see massive appreciation in these currencies over the next few years. So, You can get exposure to these types of companies that will outperform, even if you can't trade them in local currency terms. You can buy some of the commodity stocks in Russia. And-
Petrobras was a great call you made on the last
oh
interview.
yeah, that's gone up a lot, isn't it?
Yeah, it has with oil.
That's
And you know,
right.
oil's been a little bit tricky for people. You know, it's finally, you know, a lot of people still are scarred with bearishness from when it went negative. And, you know, I've been trying the short side with, you know, not a lot of success. Are we getting to a point where if the S&Ps are going to decline, there should be some type of pullback in energy, because, you know, it's just getting back to where it was around the COVID crash, where other markets have made higher highs. So
Yeah, I think that this is Brent actually, and
okay,
it's a bit better to look at because
Okay.
because you haven't got $6.50 on here, which is like Brent. You know, it's a
oh
bit
yeah,
extreme.
that's right. It screws up the charts. Yeah,
It does a bit, and even this is a bit tricky because, you know, we've had a nice 5-wave advance into August, end of August here. We've had a
Right.
nice clean 3-wave drop.
last time we were on, you said we could pull back to 33. That was the last bearish trade, and then we moonshotted up here. So you're thinking we're close here. So what a great time to have you on, Peter, because it seems like we're near multiple inflection points now.
Yeah, that's right. I mean, this chart that you see in the background here is the continuation chart. But I like to, for oil in particular, because there's no spot market that really is available, where you get the rollovers, idiosyncrasies, and gaps and things. It's best to look at the outright contracts comparison. This is the March 21 contract for Brent, and I think this pattern looks a bit like a zigzag. In which case, you know, this is wave A. I was playing around with this this morning. So this would be basically wave A, and this is B, like this. And you got wave C coming in now. So it can do a little squeeze up a little bit more. That's 56.86. It's probably worth writing that down if you're trading oil and waiting to see if we get some response. I think we probably will, almost certainly will. And that would bring us quite a tidy correction down to the downside. So
Okay.
that's certainly
So
worth.
the metals have been kind of tricky, except, you know, there have been some clean formations for bullishness. So if we get a dollar rally, we get risk off. What's your path forward with gold and silver into the next?
Oh, well, I was just flipping to copper briefly.
Oh, okay, yeah,
you know,
because you know what, I remember I was bearish short. For you called that there's going to be one more washout and then a moonshot, and you were certainly right. A lot of people have been trying to short copper all the way up here because they were bearish on the economy. But now you're saying we're, you know, approaching the top up here now.
Yeah, there's a nice 5-wave pattern up from the March low, and interestingly enough, that March low never broke below the 2016 low, which was back here, and it was a close call, but it's a deep second wave correction. And since then, we've been moving up in 5 waves, and this is getting towards now completion. I think you'll probably see that top out the next day or two, actually.
Okay.
And we'll then start to change to risk off, and then we can start looking at a nice correction back to wave 4 proceeding. As for gold and for gold and silver, yeah, I'm a bit bearish for gold and silver. I have been since August, by the way.
I missed this last rally too.
I didn't.
Okay, good.
But I have to say that I shorted a couple of days ago gold and silver. I've still got my silver short, but I closed out gold when it dropped yesterday.
Yeah.
I got a bit overextended on my positioning, so it was either going to close out silver or gold, but I want to go back in, and the simple reason is that there's two things. One is that let me just find my chart here. Okay.
That's gold.
This is gold.
Okay.
Okay, and when we go back to August, we have this very clean zigzag
Yeah.
down here. That's dead easy to see. You've got a nice symmetrical triangle. We come up in 3 waves. This is X. We have another 3-wave drop. But this is where it gets a bit more complicated because, and this is where sometimes proportion helps. I don't know if that is a secondary zigzag and we've got a third down to 1660, or whether or not gold at one stage I thought might squeeze up to 1980 and then drop down to 1660.
Okay.
But I believe that the entire decline from August is incomplete, and main reason for that is that we're trying to correct the larger picture all the way back here from August 18, 1160. And this movement down to here into the end November low is not really deep enough to represent a full correction of this entire uptrend. It's way too small. It's a bit like the S&P, which we started with, where the initial downswing in September is too small to really satisfy a correction back to wave 4 proceeding. We're definitely going to need some more. And the other thing that's a bit of a tip off with gold is the cycle. I'm just trying to see if I can find that here, but I think I think this is my gold cycle. Yeah, this is my daily gold cycle, and you can see that it had a bit of end November was the low there. You can see we've been flipping up since, so it did show that there was going to be a bit of a flip, but it's going to start as soon as we get into February. We're going to start dropping down again here.
Okay.
And don't forget, this is not meant to show amplitude. It's just timing and direction. But I think that if we overlay that to what we're seeing in the gold price from an Elliott perspective, we're going to get down to these numbers. I think that this is going to be a bit of a washout for gold still. So I'm a bit bearish at these price levels.
Why don't we wrap it with yields? A lot of people are getting bulled up on yields now that we cracked 1%. I think I took a look at your work, and you're looking for one more dip in yields after this move up in the 10-year towards over 1 bip.
That's right. Yeah, I tend to think that the yield. This is the 10-year Treasury yield.
Okay.
So we're trading at 107 today, but what I don't like about this is that, well, first of all, what do you think 10-year yields will do if we suddenly go risk off? I mean, if we go risk off and we start getting if I'm right and we get a 20% correction in the S&P, what do you think yields are going to do? Are they going to go up or are they going to go down?
Yeah, down.
Yeah, they have to go down.
Yeah.
I mean, and the other
they
thing
don't
is,
have to be. There will be a time, don't you think, where we could have risk off, and the problem is sharply higher yields, but we're not in that situation yet.
Well, actually, under what condition do you think that could happen? Where risk off comes in and yields still go up? In what way?
The Dixie going to 50, and rates going up as people avoid our debt.
Yeah.
Not because of economic growth, but because of a currency crisis.
Yeah. Okay. Yeah. Granted, I think if we get our long-term dollar call right, and we're moving down rapidly in the next few years, then yes. Well, I think that's true. Here, yeah, you're right. We're in a slightly different situation. This movement up from 60 basis points worries me a little bit because I don't know really what that is. There's too much overlap. It's either an overlapping diagonal. It could be a leading or an ending type, really. In that case, don't know. Could it sort of accelerate a lot higher at the moment? I don't think so. Not with the backdrop if we're looking at risk off. I mean, if this does to accelerate higher at the moment, then we're wrong in the dollar. We're wrong in the S&P. We're wrong in the Nikkei. We're wrong in the Nasdaq. We're wrong in so many different asset classes.
So we may as well go to Bitcoin. Is Bitcoin going to be, really has taken advantage of dollar weakness? I really can't wrap my head around blockchain, but I mean, the move's been unbelievable. I know it didn't surprise you, but if we're going to get a shakeout of risk, is Bitcoin going to be succumb to it, and there's
Well,
our answer.
Yeah, I mean, it's done phenomenally well since September.
Yeah.
Don't forget that it coincided with the lows in March. So during
Right.
the risk off phase that we had and the collapse in March, it came down
Yeah.
here. So it sort of
Right.
synchronized with the main sort of the main asset classes that we saw before. The big question with this, I'm using log scale because otherwise it doesn't make sense to look at
Yeah.
at Bitcoin in linear scale. Otherwise, if you're using channels and things, it just doesn't make sense. You've got to use log scale to really understand where the long-term trends are coming from and the measurements of them. I think we're going to get to at least 250,000 in the longer term. Then the question is,
Don't
what
you still have
sequence?
your 100,000 target long term?
I got even, yeah. I mean, I think we've gone.
I remember seeing that a year ago or 2 years ago. Your long term.
Yeah, I mean, I've revised it since to take into account the fifth wave, which was missing in the report before because we had a bit of a scale problem.
Okay.
And I think this is what it looks like now: 250,000 eventually. You know.
Wow.
This data we're putting in by hand because we're doing a bit of a cheat to ensure that the scaling works, because the software doesn't allow manual scaling. So we're putting this in manually, so it's not got the latest price action here. But basically, I think this is the correct wave count. We're going going phenomenal. I think we get to 250,000. What I'm doing at the moment is I'm trying to see if we could do an alternate count here. There's two things. First of all, if we go risk off, a bit like the 10-year treasury yields, if we go risk off, what do you think Bitcoin will do? I think we're going to get a bit of, we're going to go through a correction.
Yeah.
And the question is, how far does it go down? But that would depend on what sequence this is in. At first, I tried to overlay this with the Russell in as much that the Russell, the Nikkei, the Indian market, they all look the same. 5 waves up from March, coming into a peak. This is a 5th wave extension. But if this is replacing, this area here is replacing a first wave, and this is a second. Normally, 80% of the time, third waves are longest in the sequence of an impulse wave.
Mm-hmm.
And if we just measure wave 1, assuming that we have an alternate count here where this movement up from the March, here is wave 1 like this, and we take this movement, well, we're getting a little bit longer, but we should be doing something like minimum 138.2. Well, that will take us up to 49,000.
Yeah.
So if this doesn't stop and put the brakes on right now, I think that we would then change this count to 1, 2, 3, and we'll get to maybe 49,000 thereof, and then we'll have a dip, a fairly strong dip, but as a 4th wave, and that dip will probably bring us back to that. Do you remember this first day of trading this year?
Yeah.
That traded down 19.5% in one day.
Yeah.
But of course, if you go up to sort of 49,000 and then get a drop down to those numbers, it's going to be percentage-wise a bit of a killer if you're leveraged.
Yeah. Well, Peter, if I put together everything that we've talked about today, it sounds like any that you should start right now, putting your shopping list together, whether it's stocks, precious metals, currencies you want to be long term, crypto, really across the board, that we're going to have these markets come in, and that after the dollar rally is over up around those levels and starts to head down, you could be long the world.
Yeah, I think if you have the ability to really take into account, we call this next phase the inflation pot, because we are going to see rising inflation down the road, not in this first quarter of this year, because we've got to get this correction out of the way first. But after that, I think the Fed are going to be pretty embarrassed, because here they are sitting on their seats with looking down the pipe with no inflation, and thinking that even if inflation comes around, they're not going to be active in changing their current policies for obvious reasons. But I think that's going to be a repeat of the 70s. I think that we're going to see inflation get out of hand from maybe, you know, at least from the middle point of this year onwards. And I think that's gonna send this. I think it's going to pull the dollar down dramatically, and we're going to see what I call an inflation pop
Right.
over the next several years, and you know, dollar declining rapidly, and these emerging market currencies should do very well. So if you can get exposure in some way to emerging market currencies, you know, we talked about SID
Yeah.
and some of the Brazilian stocks that you can buy on dips. Don't buy them now. Wait for the dips to come, because if you didn't buy them already, it's a bit late.
Yeah.
You might get hammered if you bought them now over the next few months. But you know, buy it. You know, take a look in March, April time, and then take a look and see if you've got satisfactory corrections. You can go in then and start to unleverage and put them in. I mean, these are amazing trades, and actually you don't need to be leveraged in them. They will still give you huge multiple returns, and that's the great thing. You know, you're not going to be stressed out if it goes against you a little bit, because
Right.
you're unleveraged, and you'll still get the capital gain, you know, with the currency too.
Where will Newmont pull back to? I know that's your bellwether, and we'll wrap it with that.
Okay, well,
If you're right about gold going to 1650, you know, your bellwether, you have sharply higher long-term targets. I know in Newmont, maybe we pull back to the low 50s.
let's have a look. I actually haven't.
You haven't looked at Newmont? So-
Let's have a quick look. Yeah, well, we were looking for a bit of a pullback still, and
Yeah, 45.
probably hasn't done quite as much as it
No.
should do yet. You know, it probably
Yeah,
needs
they've
to
been
trade down a bit more.
underperforming recently, the shares compared to the bullion.
Yeah, yeah,
Okay.
it needs to drop back a little. But I mean, the long-term picture is still very bullish.
Yeah.
I mean, we're looking at 160. So
Yeah.
you know, at some point we need to
Yeah.
sort of get.
I'd
up to
love
those
to own
levels.
it down there around 40. So Peter, another great presentation. Glad that I have you on this beginning of the year week. So we have some things to consider. So for people to keep in touch with you every day and what you're thinking, instead of, you know, hearing you once every 3 months or so on Face, how they go about it.
Oh, well, thanks, Dale. Yeah, I mean, if anybody's interested in, we publish twice a week a report, and you can log in and see all the charts online, as well as downloading a PDF. And you can just go to wavetrack.com. This is Wavetrack International's main page. And if you go products and services, and well, actually, you can go to registration and subscription. Go to subscription, and you'll see. Here is the Elliott Wave Compass report. It's $39 a month, so it shouldn't kill you. And at the moment, we're running our annual reports. Part 1 is already out. This report is stock indices, and you can actually go to and find this if you just go to the main page and look at our news alerts, top right here, and click on Stock Index Video Outlook. You'll come to this page. And this gives you a pretty good, concise idea of what's contained in this. It's a PDF report of all the charts, but it's also a 2-hour video inclusive. It
Wow.
costs $48, and I chatter on for about 2 hours, going through about 84 slides. So we're talking about US indices over a slightly longer term outlook for this one. But it's quite good because we look at various different cycles. And if you're interested in other peripheral indices around the world, like Europe or Asia, we have tons of information in here. And if you want to specifically read about some of the content, you can scroll down here, and there's a list of all the things contained in the report down here. You can see there's quite a long list, and that's $48. Yeah.
Love and respect your work, Peter.
Thanks very much, Dan.
And like you.
Well, best of luck with everything. I mean, I tell you, and it's incredible what we've been through over the last year, haven't we? With COVID and everything, and trying to keep up to date with everything at the same time. Let's hope that everybody's safe and well, and that we still have some ambition to trade successfully, because I think there's some great patterns around, and keep on the right side of the fence. Everybody's going to do well this year too.
my trading warrior brother, Peter Goodburn. Check him out. Really, one of the best Elliotticians I know, and I know quite a few. So, Peter, thank you very much for being with us, my friend, and may you and your loved ones remain untouched by this invisible enemy, and may all your counts not be alternates.
Oh boy,
I just, it just
you've been
flew out of
listening
my
into my
mouth.
prayers in the morning. Thanks a lot.
Isn't it? May all your counts not turn into alternates. All right, buddy?
Thanks, Bill. Appreciate
It's
it.
always great hanging out with you, man. All
Take care.
right. That's a
Adios.
wrap, everyone. And we'll see you for the MFP tomorrow. And actually, I'm going to be interviewing a journalist, Charlie Gasparino from Fox News and the Post. And we could ask this conservative guy what he thought about people, going into the Capitol building and breaking things. So, Peter, thanks very much. And we'll see everyone tomorrow. People
Thanks
are
again.
thanking you for your work, Peter.
Adios.
You're appreciated here in face.
Thank you. Goodbye, everybody.
All right. Bye-bye. Oh, yeah, I forgot. Don't just count your pips, count your blessings. Almost forgot. Oh, my God. Okay. See you, Warriors. You're welcome, Gordon. Sinatra, Hugo, Giars. See ya.